I think if you're holding fiat currency, specifically US dollars, rather than converting it into gold and or silver, you're taking risk. If you're holding gold or silver, I don't think you're taking any risk.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And it is that time again for the silver and gold market update. I have Dave Kranzler over there joining me as always. How are you, Dave?
Doing well, thanks. Apparently there's some Christmas glitter floating around my office, so
It looks
you'll have to talk through it, my friend.
Looks like it's snowing, but that's all right. And Christmas right around the corner, Hanukkah, so happy holidays to you and yours, Dave.
Likewise to you.
And real quick note before we get started, we did have additional drilling results for Arcadia Or Gold. We've been covering 18.22 meters of 5.43 grams per ton gold and 83.42 meters of 1.2 grams per ton gold. That's up in Canada. So Dave, I know sometimes you don't like some of the other jurisdictions. So at least for folks looking for gold exposure, while gold is down a little bit, there you go. And Dave, actually, it maybe fits perfectly because what I would love to get your opinion on today, a lot of people have been watching you for a year now or far before that, but certainly we've had a wild year here. And for people who are new and coming into gold and silver, one of the common questions, do I get gold? Do I get silver? Do I go into the mining stocks? And I was hoping perhaps today you could give, I mean, there's going to be a different answer for different people, but at least lay out the different risk return profiles and what people could be thinking about there.
I mean, you said you want my opinion, right?
Yeah, the secret sauce. Dave Kranzler.
Well, I don't have any opinions.
Okay, give us the facts that they won't find on Wall Street or in...
I think if you're holding fiat currency, specifically US dollars, rather than converting it into gold and or silver, you're taking risk. If you're holding gold or silver, I don't think you're taking any risk. I don't know what your risk would be. I guess the risk would be that the world outlaws the use of gold and silver as money. I mean, so I think people look at silver for whatever reason as being more risky than gold. Maybe, it's certainly more volatile. But if you, over the last 20 years, gold has been the best performing asset to hold, and silver's been the third best performing asset to hold. So, and I'm not sure where the mining stocks stack up in there. I mean, what I will say is that if you look at the mining stocks, well, first of all, if you look at just say the price of gold relative to the money supplied, gold is extraordinarily cheap versus the amount of dollars that are floating around out there versus 20 years ago. I mean, I think I just saw the stat, something like 21% of all dollars in circulation have been created since March. So that's your risk holding fiat currencies. There's nothing that stops the central bank or the Fed from creating an infinite amount, and it looks like they're well on their way to becoming an infinite printing machine. So and relative to the price of gold and silver, if you can measure this just using, say, GDX, for instance, and the value of mining stocks right now are almost as cheap as they were relative to the price of gold and silver as they were in early 2001 when gold was down at 250. So, I leave it to the audience to play around with the charts. It's always fun to do that. I mean, the mining stocks themselves, it depends on which ones you're investing in. I mean, there's going to be general stock market risk. DoorDash. There's going to be general stock market risk connected with the mining stocks. There's business risk with each individual stock, especially, and that goes for producers all the way down to the venture capital junior explorer companies. I think, what I would recommend is people should own, take the amount that you want to invest in the sector, and 50% of what you're going to invest, I believe, should be spread out in gold and silver, whatever ratio you want. I personally think gold silver ratio is about 76 right now, 77, whatever it is, 75. I think the gold silver ratio, before this cycle is over, this bull cycle we're in, I think the gold silver ratio is going to be considerably lower than it is right now. I think it could easily get cut in half, if not even more. In which case silver is going to outperform gold. But again, gold has less volatility associated with its price movement. So if you're worried about, if you fear waking up every day and you're worried about seeing the price of gold or the price of silver lower, you probably want to be more weighted towards gold than silver. And then take the other 50% and spread it out in a portfolio of mining stocks. My focus on junior explorers in my mining stock journal, but I also I make sort of short-term and intermediate-term recommendations on large cap producers, as you've seen, because you get the journal. And so that's probably what I would recommend.
Yeah, well, that makes a lot of sense. And one thing I don't know if I've heard anyone mention, but you talked a little bit in there about how when you get into the mining stocks, you do have that component to which you would think they would be correlated with the stock market. Although I'm going to pull some charts back up here. Doesn't seem, even though the gold and silver stocks have rallied this year along with the gold and silver price, doesn't really seem like they've kept up with the broader markets. Here's last 5 years on the Q's NASDAQ. So basically you see a triple there versus 5 years ago, the GDX at 14. So, well, maybe not far off from a triple, but Dave, what do you think about how the stocks are performing relative to the market? Doesn't feel like they've been as bid up as some of the Teslas of the world.
Well, I don't think we're just now starting into the phase where we're seeing institutional money move cash into the mining stocks. And I talked to a lot of CEOs of junior mining companies, and they all say the same thing. There's a lot of cash on the sidelines waiting to come into the sector. That I think they want to wait and see if they can time the bottom of this latest pullback in the sector. I think we may have already seen the bottom, but at some point there's going to be, and a lot of the general mutual funds and investment funds and money managers, the ones that just sort of invest in general ideas, not sector specific. A lot of that money, or not a lot of it, but that money started coming into the sector really over the last 6 to 12 months. So, and there's a lot more of it that I think will come into it. And at some point, this stock market is going to reverse. It's going to roll over and it's going to sell off. And my view is that, again, there's going to be correlative risk with the mining stocks, because I think they'll initially get hit along with the general market. And I think that's part of what we're seeing today, especially with some of the junior mining stocks. A lot of the junior mining stocks got ripped lower today on no news. And I've noticed over the years that a lot of times the action, especially at times when I'm thinking we're going to get a big sell-off in the stock market at some point, I've noticed that the junior mining stocks kind of get sold off first. It's almost like they sort of lead the way. And my theory on that, my opinion on that, is that it's hedge funds shedding risk out of their portfolio ahead of an anticipated market sell-off. And I do think that's a big part of what we saw today in some of these names. So I mean, it's impossible to time tops and bottoms of markets, and anyone who says they can do that is either kidding themselves or lying to everyone else. So, of course, occasionally someone might get lucky, but people don't make livings timing tops and bottoms. So, I mean, I think now is as good a time as any to start, investing. If you don't have any, if you haven't invested in the sector yet, maybe start putting some money to work, but put it to work slowly. Don't take, swing for the fence positions. We're not there yet. Especially if the stock market gets cracked, we're going to see more lows ahead of us in the entire stock market, including the mining stocks. But typically, the mining stocks will eventually. What happens is, it seems, is that risk off money moves into gold. Well, they probably move into gold futures. And the price of gold starts moving higher. This is sell off in the stock market. And I'll use, you can look at 2008, you can look at this past February and March. What happens is the price of gold and silver start rising, and then all of a sudden people start jumping into the mining stocks because they see the price of gold and silver going up, and they want to put their cash to work somewhere. And so for instance, in 2008, gold and silver started moving higher in late October, and in early November, the Huey index actually traded below 150. I don't think it closed below 150. It might have closed at 148. But anyway, between early November and the end of the year, the Huey index doubled. So we're talking about a little bit less than 2 months. The Huey index doubled. And so, and we saw that, the mining stocks bottomed out maybe a week before the general stock market did in March. So I don't see any reason why that pattern, won't repeat if we do get a big market sell-off.
So is that basically the key to not try and time this and just play it for the long term? Is that?
You're not going to time it. I mean, my opinion is that we've got a lot more upside in the sector. I could be wrong. I don't know. But my opinion is that we have a lot more upside in the sector. And, I don't know. I don't know when this latest sell-off in the mining stocks is going to bottom out. I mean, the Huey index traded, I think, like about a week and a half ago. I think it got traded as low as 285 or something, and it had been up around 330, and now it's back below 300 again. It bounced nicely back above 300, and now today it closed at 293, so 293.94. So I put a little more money to work this afternoon before the close in the mining stocks, but I also have left a lot of cash available to keep slowly moving more money into the mining stocks if they go lower.
Yeah, it's another question I wanted to get your perspective on. Again, prefaced with there is no answer to this, but that's something I think about a lot, of what to do with cash. I mean, I guess it's one thing if you're managing a portfolio with a set amount. If it's someone who has business or a career and a paycheck where you get money every 2 weeks, month, whatever it may be. Any thoughts on how to handle that? To me, I kind of lean towards, I don't know, anywhere near these levels, I just like buying the shares, not losing a lot of sleep over whether it's up or down to 10 or 20 cents. And but on the other hand, I'm okay with, unless I figure out some way the Fed can ever unwind the balance sheet, I don't know, I'm okay if it sits there for a couple of years.
But if that's not unwinding the balance sheet, there's going to be a systemic reset, and that's probably going to include a revaluation or a reconfiguration of the dollar before the Fed ever. They're going to have to reset it all. The Fed, I mean, when Bernanke started what is really money printing, but being socially polite, it was called quantitative easing. He said it was temporary and that they were already working on a plan to reverse the money printing, to reverse the QE. Well, the minute they started trying to reverse it, and it was like, they shoved several trillion in they printed several trillion and shoved it into the financial system, and then like their reversal effort was like maybe I think they over the course of about a year and a half, maybe even 2 years, I think they were able to reverse maybe 10% of that, if that. And as soon as they started reversing it, the stock market started tanking. So they're not going to be able to, if they try to pull this cash out, the money they've printed, if they try to unwind everything, it's going to drive treasury yields to the moon. It's the stock collapse. The bond market will collapse. The junk bond market will collapse. The treasury market won't collapse per se, but you'll see treasury bond prices take a big hit. So they can't reverse this. I mean, look at the Bank of Japan. Bank of Japan's the largest holder of Japanese equities now, right? And that's where our central bank's headed. I would not be surprised if the Exchange Stabilization Fund already owns a lot of stocks and equities. The Exchange Stabilization Fund, of which the Fed is part of, is actually it's a subsidiary of the U.S. Treasury. So the Fed's not allowed to buy stocks, but there's nothing that says the Exchange Stabilization can't. The Exchange Stabilization Fund can't. In fact, Reagan mandated that with an executive order in, it was 1988 or something, or early 89, I forget.
Yeah.
Anyway, my point is there's not going to be any unwinding of the Fed balance sheet. And if you're worried about the risk of mining stocks or stock market in general, but you're sitting on dollars, I'd also be worried about the risk of holding dollars. So just go and call up Yara and start buying some gold and silver coins and buy the sovereign minted bullion coins, because those are recognized anywhere in the world and people trust those. They've engineered them now so that they're very hard to counterfeit, and you got to pay a little more than you might for private label coins, but you can take those anywhere in the world and use them.
Yeah, well, I get what you're saying there, and that makes a lot of sense. Although, Dave, again, let's see, back with the cash, though, I mean, is there a thought process of what you leave behind? Do you try and leave ammo so that you can catch one of the dips, or is it kind of you want to be careful about leaving too much in cash while it's getting eroded so quickly?
Well, I mean, again, it depends. I mean, obviously, you're not going to take all your cash and buy gold and silver coins. If you don't own any, I'd go and buy a fair amount now with your cash, and leave some in reserve for if prices go lower. But and I don't know when. No one knows when. At some point, the bottom's going to fall out from under the dollar, and the price of gold and silver in response to that are going to do a moonshot. And so the risk of holding dollars and holding a significant amount of your asset base in dollars is extremely high, and that includes dollar-based assets. Bonds, stocks. I mean, if you bought some DoorDash today, that's a dollar-based asset. When the value of the dollar goes down and when it starts to plummet, it's going to take everything down with it.
Yeah, I would think so. And so, Dave.
Well, it won't take gold and silver down with it. They'll do the inverse. The mining stocks, I don't know. I would think at some point the mining stocks are going to be heavily correlated with the price of gold and silver, because essentially when you're buying a mining stock, especially a company that is producing gold and silver, you're buying gold and silver in the ground and you're buying future production, right? If you're buying junior mining stocks that have resource estimates that are bona fide, you're buying gold and silver in the ground. Gold and silver in the ground is not worth as much as gold and silver that's been mined and processed and converted into coins and bars, but it's worth a hell of a lot more than the dollars that you're using to buy those junior mining stocks.
But I'm assuming gold and silver in Dave's own personal vault is worth the most, right?
We're not talking about that.
So, Mr. Kranzler, while prefacing this with obviously your fan club is vast and wide, and you're not giving legal advice, financial advice, because you can't speak to everyone's specific situation, but just in your opinion, does that leave us in the somewhat rare situation where not only does silver have the possibility of a beyond normal rate of return. So there's a high potential outcome, but also an incredibly high probability of reaching that high. So you have the high ceiling and a high probability of reaching it.
Yes, absolutely. And I mean, the story with silver versus gold right now is the same as it was when I got into this sector 20 years ago. I mean, first of all, people don't think of silver as a monetary metal. Well, it's the world's oldest monetary metal. Silver was being used before gold, at least as far as historians can tell. So we're talking about, silver's been money for over 5,000 years. It's actually constitutional money. I mean, it was the gold and silver are the constitutionally mandated currencies of the U.S. So, so you've got silver's value as a monetary metal, but it's also, as you know, an industrial metal. And 70% of all silver mined is used for industrial purposes, and so you kind of got the best of both worlds there, right? You've got downside fiat currency protection if you own silver because it's a monetary metal. And then you've also got commodity upside potential, especially, inflation. We already have a relatively high amount of inflation, not using the CPI because the CPI is structured to mute inflation, right?
Nor anything where the price goes up the fastest.
I mean, to say that CPI is the inflation rate is fraudulent. It's a lie. It's a fabrication. It's a joke. So anyway, let's just say, the real rate of inflation let's say the real rate of inflation for things that you need every day, housing, clothing, fuel, food, medical care, insurance, the real rate of inflation for that stuff is probably, I guess, the Chapwood Index basically has it running around 10% across all major cities in the country for the last 5 years. So, inflation is going to kick up even more over the next 12 months. And that's rocket fuel for both gold and silver, but especially for silver.
Yes, and I pulled up shadow stats here where here's the government inflation. Dave, I don't know what you're going to do this Christmas season. With that low inflation, you're going to be cold and it's going to be snowing in Denver and you're going to be sitting there waiting for Santa Fed to deliver more inflation down the chimney. What happened to their inflation targeting thing? Did he it's like we never really heard more about that. Was that one of those ones where they tossed it out there and it was like, wait, this is so silly. It's like a little trial balloon. Or like, wait, this one's too stupid. We can't really. We'll just show.
That's actually a good point. I haven't really noticed that. We haven't seen the term inflation targeting bandied about the financial media.
Look at this.
Recently,
You're gonna have to cancel Christmas if inflation's that low, man. I mean, that'd be
a good Google. That'd be a good Google term search. That Google's got that function where you can search on a term. Inflation targeting. I'll bet you it's taken a big dive over the last 6 weeks. Just to point out something
on that.
So just to point out something on John Williams' inflation calculus, you'll notice what he does is he simply goes back and says, okay, I'm going to calculate the current rate of inflation using the methodology that was used in 1980 in the bottom chart and 1990 on the top chart. So that's actually, if the government didn't keep rejiggering the CPI index, that's the inflation rate as it would have been calculated, the way the CPI was calculated in 1990 and 1980. So, and that's, again, that's still, they started engineering inflation out of the CPI when Arthur Burns was the head of the Fed, and that was like 1973, I think, is when he started monkeying around with it. So that's why the Chapwood Index, and they have a website. It's free to visit, and that's why I think the Chapwood Index is probably your best measure of real price inflation.
Yeah, these numbers are just measuring the amount of rigging compared to the previous rigging. It's
Right.
The
And
Fed's
make
balance.
no mistake, the best proxy for inflation is the stock market, especially if you want to look at the value. I guess they call it Warren Buffett's favorite indicator, the Wilshire 5000 index, the value of the Wilshire 5000, I think it is, to the GDP. And it's by far, that ratio is the highest it's ever been in history. So, and it's interesting to look at a chart of the GDP mapped against the value of the Wilshire 5000. They're on all over the internet, so you can Google it to find it. But that would probably be your best measure of dollar devaluation and monetary inflation right there.
Yeah, well, here's a fun one, because if our entire economy is the housing market at this point, here you see, like in the mid 90s, call it 80, we're at 226. That's a
See inflation
tripling,
there?
huh? Yeah, I mean,
that's a
well,
good proxy for price inflation also.
it's like, let's see, that's how much over 184? It's, I don't know, like 25% higher from 2007 levels. And I'm sure the Fed's balance sheet has nothing to do with that, though.
See, and that index is as of September. I mean, that index is even higher now.
Yeah. Well, it's Christmas time, Dave. We need Santa to fuel the economy. And in either case, I appreciate that you've gone to the efforts to figure all this stuff out. Obviously, we remember the last time the economy crumbled down and Ben Bernanke couldn't see subprime, didn't understand gold, talked about the virtues of quantitative easing, it's like he only did half of the homework assignment. He didn't say, like, well, if I raise rates, we're going to be fucked. You know, that part, excuse my language. But fortunately, Dave, you collected it. Oh, goodness. I don't know if we should, this is safe for children to watch. But Dave, amongst other things, what do we get in your website, Investment Research Dynamics?
By the way, just for the record, you're the one who sourced that cartoon, and when I saw it, I was like, I got to throw that on my blog.
Yeah, but I didn't tell you to, like, put it right up there so when I show your website in the middle of our interview, people see it. So that was pure. It was not planned, although it is kind of funny. Hopefully no one's...
One of the funniest cartoons I've seen in a long time.
Well, I'm sure women are flocking over you and your big brain in the Mining Stock Journal. Why don't you tell your fan club what they get in there?
I don't know. They get my opinions on a handful of mining stocks. You said you wanted my opinion, right? Well, it's right there in the Mining Stock Journal.
Sell it well. I think that's it. It's like the keen, the cunning, this, like, you just describe it so vividly that I can't wait to read my copy each Thursday. Because actually,
I don't think I'll have any new ideas in there. I'm going to have an interesting brief discussion about an issue that I've uncovered with Carlin Trend Projects. Not like it's not long-term negative, but it's an issue that doesn't get talked about for whatever reason. I think a lot of people aren't aware of it. I wasn't aware of it until recently, so I am going to discuss that, and I'll have some updates on most of the stocks that I present in the Mining Stock Journal and recommend as good ideas. Doesn't mean they are good ideas, but
yeah.
recommending them as good ideas.
Well, there we go. Now you're dangling the bait a little bit. And yeah, like, I also get, I mean, there's sometimes, especially this year, I've become aware and trying to become knowledgeable on so many mining stocks. I appreciate that you keep us up to date on a lot of the ones you follow, because there's news coming out constantly. So I think it's a home run, a silver bargain, or whatever catchy phrase. We'll talk to, you can email Yara, your marketing buddy at Arcadia at Miles Franklin. Maybe we'll get a special even for Christmas. I know you're not into giving away free stuff so much, although in your honor, to, let's say, 3 people who take tonight's interview and tag Dave Kranzler under Investment Research Dynamics and Arcadia Economics, we'll throw in a signed copy of the book, where Dave Kranzler is chapter 1. So thanks again for being here, Dave. A pleasure as always. And we'll look forward.
Always a pleasure to chat with you, Chris.
Well, thank you. And folks at home, to find out a little bit more about today's sponsor, Arcadia Or Gold, well, an interview with Marco Rock is coming your way now.